So, Jackie, what excites you the most in your particular sector that you cover? Also, I believe your sector doesn't really, it's not that related to AI and alternative data. Is that correct?
Yeah, I'd say more of our systematic managers would use more AI technologies in their process than discretionary macro. But what does excite me, based on a lot of these market moves and the inflection point where we are now, is a lot of these global macro strategies. When you look at what just happened recently, just looking at the third quarter, we had two-year Treasury yields rallied 120 basis points. Two-year Treasury yields shouldn't rally 120 basis points to have such an abrupt about-face turnaround. And that just goes to show you, that this long-awaited beginning of this rate cut cycle, usually it's a little bit more obvious and telegraphed. People thought it was going to happen at the beginning of this year. It didn't. People were betting on rate cut steepeners. It didn't. Then all of a sudden, at once, you get this change of perception and sentiment, and it happens. Goes to show you, to be able to generate alpha in global macro trading strategies could do well in these environments. You look at movements in dollar yen. In the third quarter alone, just recently, dollar yen moved from 160 to 142. It started the year around 140 and it went up to 160, down to 140. It just doesn't normally move like that. It's like the biggest quarterly move in dollar yen since the 1998 or 97 Asia financial crisis. These are things you don't normally expect. So when you live in a world with these types of movements, and just look at what happened after the Fed started cutting in September with their 50 bip cut. Just right before that happened, people thought, oh, it's not going to happen. It's going to be like 25 bips only. They started very strong, and that opened the door for China to do an unexpected stimulus, fiscal stimulus as well. Then you see Chinese equities, which everybody wrote off. It was one of the biggest short positions out there. All of a sudden have this staggering, 20. The FXI was up in that week, 18.5%, the largest move ever in large cap China ETF. So when you see these types of moves, it just tells you, be ready. It's not going to be just only smooth sailing. It's not like just being long equities where you just hope, it's just going to continue grinding higher. A lot of these movements are based on fear and they get exaggerated. So I think to lean into a strategy like this, there's plenty of things to do, trading yield curve steepeners, but it's not going to be one-way steepening. If all of a sudden the biggest risk now is inflation picks up, we have an inflation data coming out, CPI, on November 13th. If that comes out to be like 0.3 or higher, that's going to really embolden this recent trend of higher inflation, and that could really delay the rate cuts that everyone's expecting. So the curve could flatten on that. So there's a lot of dynamics at play that's exciting to capture. Either candidate who wins the election next week, they're both big spenders. Deficits are still, out of control. The federal debt is it's almost 36 trillion. It's growing $1 trillion every quarter. There's going to be a lot of issuance coming. Probably that issuance is going to be absorbed at higher yields. It's probably going to have to steepen the back end of the curve, but it's not such an obvious one-way only trade. It's going to require a lot of, active management. So I'd say, to answer your question, Vivek, based on so many different of these liquid markets that are moving around as it is, I think global macro strategies should be in a right place to do well, continue to do well.